Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, like, and share these videos. Well, folks, today is the final trading day of May of 2020. 2 months ago, you would have never thought that we'd be talking about the S&P over 3,000, but we are there, and we know why we're there. The Fed, the stimulus, everything that's come into the markets have pumped the markets back to this point. As we go forward, though, there's going to have to be more material things start to show up in the economy. We are starting to see signs that the economy is at least flattening out. We saw 4 million jobless claims come off, even though there were 2 million new. What that tells us is that there are people starting to go back to work. We have a long ways to go before we'll be at a point where we could claim victory. There was a vote today for another, I believe, $1.6 trillion of new debt and new stimulus. That would have helped a lot of people in the economy. That didn't get voted through. In some ways, I'm glad it didn't. I hope that it doesn't. But I'd rather see the economy restructured rather than stimulated. And this is an important point to understand. If we can get the economy restructured and start to see supply chains come back to the U.S., there's a lot of opportunity that's going to start to evolve as we go forward. More importantly, there are a lot of folks that are going to be able to restructure their lives, maybe get jobs that they couldn't get before, because there's a lot of openings right now for jobs if you want one. The restructuring is going to have a lot to do with supply chains and other types of manufacturing and other jobs that are likely to come back to the United States. Now, there's a lot of social unrest out there. Underlying anxiety still exists, but things are starting to come back. I don't know what it looks like in the area that you're in. In Arizona here, it appears that everything's back to normal almost. There's not a lot of people wearing masks. It's 105 degrees in Phoenix. Pretty much not going to have anything living around that stuff. Even up in the mountain areas, it's been in the 90s in the last several days. So we're seeing the economy come back. We're seeing people start to feel normal again. All that stuff is going to be good. Let's talk about going into June and what we're likely to see. I believe June is going to bring a lot of new optimism into the markets. We're going to continue to see an underlying bid. Don't see anything at the moment that would derail this uptrend that we've been in. And we're starting to see some things happen on intermediate and the longer term charts. I want to suggest to you that you watch the entire technical part of the video tonight as I go through the daily, weekly, and the long-term or the secular trends. I believe it's important to understand what's going on in the longer trends to understand what's likely to happen as we go forward. We're going to see a lot of new things start to unfold in the economy, and there's going to be a lot of new elements, both bad and good, that are likely to be revealed as we go forward. There's still a lot of questions in commercial real estate. There's questions in real estate in general. It does appear that the Fed and the stimulus has stabilized all the markets that were in trouble based on the shutdown. Let's take a look at the charts and see how this month is going to end and what it means for going forward. This is the final trading day of the month, and we're going to go through a complete spectrum, starting with the daily, going to weekly and monthly on the S&P 500. We're going to stick with the cash markets tonight because this is going to be a pretty significant close that we're about to have here today. And I just want to review what happened. Yesterday, we saw a trade up to the R3 number on the grid on the left. We traded to 3068.67. Those of you that follow me on Twitter, I tweeted out that look for a counter trade from there. We traded from there and went negative on the session after being positive. Traded down to the 3026.43 S2 number with a low of 3023.40. We traded within the S1 number, R3 and S1. And I've talked about when you're in an uptrend, those are likely to be the numbers that would be hit on a scale. If you're going up, it'll be S1, R2. Well, we went R3, S1, but we did it inverse to how you might think. We traded up early in the session and then went down. And this pattern was a really sloppy close yesterday, but it was not a reversal pattern. It was a profit taking ahead of the China meeting that happened, as well as for the social media move that Trump made against Twitter and others. So what we're seeing is some profit taking. I talked about this. You might flip the NASDAQ with these tech stocks starting to get hit. But overall, we're still seeing a very positive pattern in the S&P 500. I don't see a major rollover here. A lot of times you go over a 200-day moving average, you'll back up and retest it. That number right now is 3001.31. We're going to be locked in the range. And if you look at the ranges for today, S1 number is 3018 and the R2 number would be 3053. R1 is 3041. Let's go over to the weekly chart, and there's a number of things happening here that are really significant. I've talked a lot about this week. The PPM1 is at a 0.264, which is a very strong uptrend. It tells us that there's major support at that 10-week moving average, which is at 2814. That number is jumping at about 65 to 75 handles per week. So you're looking at 2960 plus on Monday. And we'll continue to see that moving average accelerating to the upside. PPM 1 and 2 are all accelerating. I discussed 2 commentaries ago about the possibilities of trading between R3 and the RXT number on the weekly charts by the end of the week. We did that yesterday. We traded to 3068.67. R3 was 3052. Our XT is 3082, and this is for the weekly charts. Traded right in that range. This thing's probably done for the week. So the close could be sloppy again today, and it won't really change any material viewpoint of the trend as far as it's going on the intermediate basis. Now finally, we're going to take a look at the monthly graph. And you'll see this big expanded range, but this was pretty amazing this month. So these numbers on Monday will be updated. The numbers that we're looking at on the screen right now were for the month of May. So there'll be new numbers that come out on Monday for the month of June. We look at the high-low. The high was 3068.67, which was made on Thursday. And the low was 2766.64. So let's look at the grid. Now this was the grid for the month. S1, 2755, the low 2766. That the low was about 10 handles above that. I talked about that a number when we hit that level and we traded down into that range, that I thought that would probably be the low for the month based on the grid. Now we're looking at R1 is 3068.97. Yesterday, 30 cents off of that mark. So there was literally a 300 handle trade off those numbers. I've been talking about how this market is trading in this big broad range. Well, it not only traded in the range, it exceeded it. We know it went over the 200-day moving average. We can see that a lot of trends are starting to turn. It's interesting that the low that we had, and I know I remember discussing this a number of weeks ago, the low was right at the 40-month moving average, which was also the green line here at 2753.67. So you'll see the green line that's right here. That is exactly pretty much where the low was. The low was 2766.64. That average was 2753.16. So you had a cluster. I talk about this a lot of times when you start to see numbers clustering around. So anxious to see what the numbers come out for the new grid for next month and what type of volatility we're likely to see. Now, one of the things for sure that has happened, and I've talked about how these calculations are done, is how they're done is they're looking at a 3-bar look back, the average of those 3 bars, and then doing some Fibonacci projections on a grid. You can see the biggest month, of course, was March, which had a huge range. We contracted in April, and now in May we had a narrow range. If you've been watching the channel long, you'll remember some of this. If not, I'll just discuss it. What's happening is as these ranges start to contract and we get out of this crazy volatility that we were in March and April, we start to normalize the markets. They start to trade more in the pre-crisis than they did during the crisis. So that's the normalization you start to see. The liquidity shows up, the bid ask, all the spreads start to tighten, and all that actually started happening in April as the market started to move up, and that's why these ranges have been compressing. When we look at these monthly charts, the PPMs are all still positive. So there's still long-term secular uptrends that exist in this market. Now, if we would have stayed down and closed lower in April and we were trading down in the 24 handle instead of where we are, these averages and the PPMs would have rolled over, suggesting that we're really starting to accelerate on the downside. Well, that never happened. The V bottom that we saw, the rebound back over the averages, they have kept the longer term trends intact, which is amazing in itself. A lot of things that we've seen happen over the last couple months have been hard to believe, but we've seen between the Fed and the stimulus, we've seen $5 to $7 trillion, depending on how you want to count this stuff. They were just throwing around another 1.6 trillion today, but it got voted down, but they're still throwing money at this thing and trying to pump up the markets. I just wanted to point out the month of May, those of you that go, sell in May and go away, well, you're real disappointed. I haven't seen that stuff work for a very long time. There's very few years to those seasonal little cliches that have been around before I was even born actually do anything. What we're looking at as we come into the month of June is probably a slight contraction of the ranges that are going to be projected by the market grid and on all levels. So we're going to see a contraction on a weekly, monthly, and the daily charts have already contracted substantially, so that normalization is likely to continue. Now, whether we fail at this 200-day moving average or not, that's too early to tell. If I go back to the daily chart here, we still have that trade that was put on at 28.42. There was a buy there on 5.4. That position's still long, and it may fail. What I present here on this channel is how to be a trend follower, how to be able to follow these things with a discipline and a structure behind the ideas and the concepts. And what I talk about on a day-to-day basis, what I discuss is actually the noise, what's likely to happen, and the probabilities that are likely to happen. Still long on a short-term basis. Intermediate basis is still neutral. I think for those of you that are users of our software, we could see a lot of buys coming out. Anyway, this will complete the video. We'll talk to you on Sunday night. Thanks so much for watching. I'm looking forward to next week's live stream. Thanks again for watching.